silver can make a move in weeks, which could take gold months. The physical market is taking over the paper market and the futures market. And whether you're going into, fitting for this interview, Contango or backwardation, and we're going back and forth between those two things. Essentially what we're seeing here, David, is we're seeing a multi-year breakout, an all-time high in both metals.
There's nothing out there saying that gold is going to go down and precious metals are going to go down in value because we keep printing money. I mean, that's fundamentally what's driving all this.
Shawn Khunkhun, CEO of Dolly Varden Silver, and Rick Van Nieuwenhuyse, CEO and president of Contango ORE. First time having Rick on the show. We're going to be talking about this new merger proposition, as well as the current silver and gold markets, skyrocketing ores across the board. So we'll talk about what's next for the entire space. Welcome to the show, Rick. Good to see you again, Shawn. Thank you, gentlemen, for both being here today.
Yeah, David, thanks for inviting us on the show. Appreciate it.
Nice to see you, David.
We're going to start by talking about the market itself. And of course, the major news of the day, proposed agreement between Dolly Varden Silver and Contango ORE, that they've entered into an agreement to combine the two companies into what could be renamed Contango Silver and Gold Inc. Each company will have existing shareholders own approximately 50% of the outstanding shares of MergeCo. Will be led by yourself, Rick Van Nieuwenhuyse as CEO, Shawn Khunkhun as president, and Mike Clark as executive vice president. More on that later. First of all, Shawn, you've been on the show several times. I've had you on recently talking about the silver market. It was silver at $58, though. Let's talk about that first. What happened in the last couple of weeks? There was a surge to 49 and then 50. And then once it broke 50, people were watching what was going to happen next. And then it just sustained 50, which was unprecedented. And now we're almost at 60. And gold, importantly, didn't spike up to the same degree in the last month. It stayed flat. What's going on?
Well, my friends are the exclusive providers to Costco of silver and gold, and some of the biggest gold and silver sellers in the world. And I had a conversation with them this morning, and what they're telling me is the physical market is taking over the paper market and the futures market. And whether you're going into, fitting for this interview, Contango or backwardation, and we're going back and forth between those two things. Essentially what we're seeing here, David, is we're seeing a multi-year breakout, an all-time high in both metals. And I think for silver, this reminds me of when gold finally broke through 2000, right? And it was a swift move to 3,000 and then on to 4,000 and beyond. And I think if we look historically at silver, silver can make a move in weeks, which could take gold months. So it's a contracted move. Some of the big themes this year have been the Indian buyers. India has bought 4 times more metal this time of the year, this period of year, as they did last year. So we're seeing a lot of demand. I joke with friends and family that when we're running off to the malls and buying stuff we don't need, people in China and India are lining up for gold and silver. And so we're seeing heavy demand out of India, continued demand out of Southeast Asia. The Russian central bank is participating in a precious metal strategy, which includes silver. So just a lot of demand, and we're seeing the price explode. We're seeing a breakout, and not a lot of physical supply. There's big demand on the Perth Mint, on local mints. So what's different this time, David, is this time the investment demand that's coming into silver is met by that industrial demand. So, industry is now asking for about 60% of the market. And at the same time, simultaneously, investment demands pick up, which has led to a price breakout.
Rick, you're a geologist by training and background. Tell us about your experience in the field leading up to this particular moment, which is historic for everybody involved in the space. As a geologist, how would you interpret this price action, and what does it mean for geology and exploration overall when we have gold at above $4,200 and silver at nearly $60? Does it change anything fundamentally?
Well, sure. A lot of changes, but I think a couple of things here. The price of the metals still isn't reflected in the price of the equity, so we're still seeing a significant discount relative to the cash flows. And this includes the big companies. It's not just the junior producers like ourselves. So we think that's going to, as that evolves and as that market, and as Shawn points out, there's a deficit of actual metal. A lot of trading is on the forward curve and on the futures price. When you actually need metal and want metal to do the things that you want to do with it, whether it's to stick it in a vault and hope nobody takes it away from you, or if it's to build, a solar panel, that you need real metal for. And so we're seeing that crunch come. And what it means for exploration is that, the market's waking up, that we haven't been spending enough dollars on exploration. And this goes back for probably at least 10 years. Back when, probably in 2011 is the last time we saw sort of a peak in dollars being spent on exploration. So that hasn't happened yet, because the generalists are just starting to show up to the table to invest in resource stocks. So that, I think that's all great for the capital markets and for more exploration, and that's where we see the real synergies here between the two companies. Is we have high grades, we're in a safe jurisdiction, or safe jurisdictions, BC and Alaska, and we control the combined company will control 4 districts, not just 4 projects and 4 resource areas, but 4 districts. So lots and lots of exploration upside to speak of there. But the focus is, as we've been demonstrating with our direct shipping ore model, is to get these things into production quickly, which is what you can do when you have grade. And grade is king in our business. And if you've got grade, you can afford to transport that ore to an existing mill and bypass that lengthy time period of getting things into production, getting things permitted, and raising, hundreds of millions of dollars of capital to build a new mill and tailings facility. That's a challenge in any market for a junior company. So our DSO model works perfectly for high-grade deposits like Kitsault, and it's a great complement to the combined portfolio. So we're really looking forward to working together to build what I've called a rocket ship, because this combined company is going to have 31 million shares outstanding.
I have a question for, well, I guess both of you could take it, but I'll let Shawn take this one first. So there's a theory out there that because high grade is harder to find now than maybe 30 years ago, and perhaps we've reached peak gold, perhaps deposits are getting rarer to find, that higher prices are going to be stickier for longer. And this time isn't like 1980. So can you just comment on the supply side of the equation and whether or not that statement is true?
Yeah, listen, we have seen peak production across the board, and we've seen, like, I can speak to the silver space where, we're down to about 830 million ounces a year of annual mine supply, which is off about 25% of where we were a decade ago. So that is playing out, and not only is it a function of, like, lower hanging fruit, and it's just being more and more challenging to find those high grade projects. We're also seeing more resistance to projects from communities and governments. And so I think the key is being in mining districts where you've got brownfields operations, where mining operations are celebrated by the community, by the governments, where they're really a fabric of everyday life. And I think if you look at the northern jurisdictions that we're focused in, where we have a competitive advantage, Northwest British Columbia, the Golden Triangle, throughout Alaska, these are sites where really without mining, the north is limited, right? So in terms of grade, what's really unique, and David, this is something that your viewers, a point I really want to emphasize is you've got to build your deposit during the cycle. If Rick talked about 2011 being the peak of the last cycle, there's a lot of projects that got orphaned in 2012 and 13 and missed that cycle. The Contango business model of DSO is a revolutionary way to get a project into production faster. And one of the reasons I wanted to do this merger is I wanted to leverage that business model. Dolly Varden does not want to miss this cycle, right? And Rick's come up with a way, a lower cost way in a shorter time frame by not having to build the processing facilities, permit the tailings, and I think that's very, very, very important that we get our shareholders exposure to this mineral wealth as these prices are at their nominal highs. I think they're going to continue to go higher. But again, if you look at mining companies and projects from discovery to production, it's often decades. And so we really want to do as much work as we can. And this DSO model focusing on tier one safe, high grade jurisdictions is the key.
Rick,
Dave,
yeah,
I'll
please.
just maybe add to that um, Shawn mentioned grade, and when you look, it's actually whether it's silver, gold, or copper, they're all three showing the same thing, that we haven't been reinvesting in the industry enough to find new things. So the big deposits, they just add another mill, increase their capacity from 50 to 70,000 tons a day, and mine a lower grade ore. You don't make a lot of money doing that. You're basically just not shutting down your mine. So that's a limitation on future capacity and future production. All the great things about the DSO model and focusing on high grade is, one, it's a very small footprint. Two, you're focused on grade, so you don't have to worry about going out of business if the metal prices drop by 10 or 20%. That happens all the time in the resource business. That's not, metal prices can move up and down for a variety of international reasons and things that you don't control. So those are all the reasons we like high grade. And again, from an exploration standpoint, you've got lots of, when we put these companies together, you have 4 different projects that are all focused on delivering high grade resources.
Going back to the same question about discovery, is it harder to discover high grade right now? The narrative that discoveries are collapsing worldwide, whether or not you're a junior or whether you're a senior, brownfield and greenfield, harder to extract, and mine lives are getting, I guess, shorter. Any truth to any of this?
I mean, I think bottom line, I'll emphasize, we as an industry, we haven't been putting enough money towards exploration. So that hence you see the exploration dollars go down, the discovery rate goes down. And you've got to, we could only focus on what we're doing. But I think, and that's, we've got these 4 high grade districts that we've been successful on, and we will continue to be successful on. What the rest of the industry is doing is quite different. Finding a 1 gram gold deposit, if it's got a high strip ratio, you barely can get the ore to the edge of the pit. So that's the difference. A high grade deposit is always going to make money. These low grade things can in the right market, but if the market corrects by 20%, the metal prices correct by 20%, you're suddenly underwater. So we like having those high margin, producing those high margin ounces.
And the only thing I'll add to that is if you look at jurisdictions like Nevada or Quebec, you take the Abitibi, for example, where they've discovered 200 million ounces of gold, off the side of a highway. The opportunities, the reason they're going from the 7 and 8 and 10 gram historical averages down to 1 and 2 grams is because they've depleted those deposits. We're in an area that, because of climate because of infrastructure up until the last few decades was more challenged. But the reason we have these opportunities is few venture here, few know how to operate in the northern climate, and that we've made a business of it, and we've been very successful. And that's why we've got these tremendous grades to unlock. Is we're venturing into a jurisdiction where it was historically more remote. And in the case of the Northwest BC, up until 40 years ago, glaciers covered a lot of our ground. And so we're seeing glaciers recede, we're seeing new exposure open up, and we've come in and made discoveries and very high grade ones.
So let's talk about the merger itself and the M&A landscape in the industry. I guess, Rick, I can start with yourself here. Going back to what Shawn was saying earlier about doing deals and perhaps doing drilling and exploration when the cycle is right. Why is the cycle right now? I've always thought, and perhaps some other people as well, that maybe the industry would have been better off consolidating when prices were much lower, a trough in the market, when there was a bear market. Wouldn't everybody get, I guess, a better deal is my question. But clearly that's not how it works. So can you maybe explain why now in this cycle is right for M&A?
Yeah, and you have to kind of put everything in context for the companies you're talking to. And in some ways you're right. It's better to do M&A when things are cheap, but when things are cheap, people don't want to sell because things are too cheap, and they've made a lot of they've spent a lot of effort and time, and their shareholders may have put in dollars at higher values, and so. It is difficult to buy low and sell high, but that's how you can make money. But if you're building a business, you have to take a longer term view. And so for this merger, why it makes sense to do this now is because we're combining production, development, and continued exploration, and that's what the two companies bring together. So Contango has a portfolio that includes the Manh Choh project, which is in production, produces about 60,000 ounces of gold on average for the life of mine.
And just for the viewer, where is this project located?
All of our projects are in Alaska. So this is located on land owned by an Alaska Native tribe. We've been working with the tribe since the early 2004 or 5 or so. So we have a good, strong relationship. They have a royalty, so they're incredibly pleased with how this has turned out for their tribe. The tribe has 150 people in it, just to put it in perspective. So it's in Alaska. It's a mine. It's an open pit mine. It averages about 8 grams per ton, which is very high grade for an open pit. I think it's one of the highest grade open pit mines in the world. And rather than building a mill and a tailings facility and permitting all of that at our site, we simply run a mine ore in a truck and truck it up to the Fort Knox mill located just outside of Fairbanks, which is where I live, in interior Alaska. And they process the ore there at their mill. They have excess capacity at the mill. So about once a quarter, in the middle month of each quarter, we process approximately 200,000 tons of Manh Choh ore. That's as it's delivered by truck to the stockpile at Fort Knox, and run a batch of ore that basically takes a little over a month to run. And for our share of our 30% share of production, we get about 60,000 ounces of gold a year, and based on the current gold price, we're in excess of 100. We're generating over $100 million of free cash flow. So,
Rick, can I just emphasize one point? I want to emphasize one point here, and David, Rick at Contango and myself and the team at Dolly Varden, we did do what you talked about. Rick has put together a portfolio of assets, including Johnson Tract, which he acquired from High Gold. He's got the Lucky Shot. So Rick was out there during a trough, during a bear market, building the blocks of a portfolio. Simultaneously, what Dolly Varden was doing is we put together a portfolio of 5 past producing silver mines We accomplished 5 acquisitions to do that. And so simultaneously, the companies independently were doing that. We've now decided at this valuation to merge because we believe that an enhanced capital markets profile with greater liquidity, with a greater balance sheet, with all the shareholders that we have, which are the big institutions, the corporates, et cetera, are going to put us in a position because our access to capital, right? Whether it's through the financings we've done historically or it's through the well-funded operations at Manh Choh, are going to put us in a position to continue growing this rocket ship. So we have been buyers during the bear. And as we move into a bull market, not all companies have the same access to capital, nor do you have, there's a lot of groups out there that are seeing these nominally high metal prices that are very, very happy now to move along. But on a relative value, as Rick pointed out, the mining stocks are still really low price compared to the commodity price. So we still see an opportunity here to move together in this enhanced profile and continue to grow and build.
Rick, what lessons have the industry, and especially you and Shawn, learned from 2011? Back then, Shawn and I talked about this several times, that the reason perhaps M&A is slower this cycle up until, I guess, now, compared to 15, 14 years ago, is that the industry is still reeling from some of the mistakes that people have made back then in terms of overinvesting and perhaps making bad deals. So what have we learned from these bad deals that we can apply today?
I'd say the lesson, if I could sum it up, it's kind of goes back to the Lassonde curve. And, there's that excitement of discovery, and then post-discovery, all the hard work starts. And while the junior company or the company that might be considered to be acquired by a major intermediate, there's a lot of excitement about that discovery period, but it's a difference between resources and reserves fundamentally. And what the Lassonde curve shows us, if you look back at when Pierre created that curve, the valley of death, as it used to be called post-discovery, used to last 2, 3, 4 years. It takes a lot longer now to get a project, excuse me, through that curve. And because everybody wants everything de-risked, whether it's regulators, whether it's investors, whether it's bankers who are going to put a loan together to build the mine, everybody wants it de-risked to a far greater degree than they did in the late 80s when Pierre first came up with that curve. So that's where I think the M&A process has slowed down. I think companies are more diligent about really looking at, is that resource really going to become a reserve, and how easy or how difficult is that going to be to do? And obviously time's a factor. And so, that great period that exhilaration period you feel during the discovery phase, it takes a lot longer now for companies to get through the other side, and so they're being more circumspect. Great Bear is a good example. Our joint venture partner Kinross acquired that project. The market didn't reward them right away, right? They was really circumspect. Geez, you're paying a lot for potentially a lot of ounces in the ground. But as they obviously made a good call because and the gold price has gone in their favor. But that, I think that will turn out to be a great mine. But it was to Shawn's point, it was off cycle.
And David,
Yeah,
from my perspective, the industry, if you go back to that previous peak in 2011, the industry went from sub $1 billion of debt to 40 billion. Share issuance exploded. It was very commonplace in the sector to have 1 billion shares issued and outstanding. I think the lessons that Rick and I are taking from the previous cycle high is we have a company that is going to be 31 million shares on a pro forma basis. However, we've got cash flow, We've got 3 million ounces of gold equivalent, or, if you look at it through a silver lens, 225 million ounces silver equivalent. And if you divide the cash flow, the cash in the treasury, which is north of 100 million US dollars, plus the mineral inventory on a per share basis, there's a lot of value for shareholders. So I think as the entire industry has paid down debts and have gone through those hard lessons that we learned in the previous cycle where, you know, companies were just trying to grow at all costs. The DSO model that Contango has really put on a clinic on executing is a very disciplined model. They're not looking at the gold price going to $4,300 an ounce and going, what sub-gram deposit can we go after? It's adhering to a strategy that really works in all price environments. It's disciplined. Again, where we're not going down to Papua New Guinea for great geology. We're staying in a tier one jurisdiction. So again, I think I really am celebrating Rick's philosophy at Contango, where we want to be in tier one jurisdictions. We want to focus on high grade projects to advance this DSO model. And I think it's because of the lessons that him and I both learned in the last cycle.
Well, I guess my next question pertains to both of you, which is why you selected each other as a partner. I'll start with you, Rick, first. You mentioned your project is already operating in Alaska, but Dolly Varden, my audience is familiar with Dolly Varden because Shawn's been on the show several times. Dolly Varden has deposits in the Golden Triangle, silver deposits in the Golden Triangle in northern BC, not yet in production. So how do you realize synergies when you combine an operator with an explorer that is not yet in production?
Yeah, so we have exploration assets as well, and one of them we haven't talked about yet is his name is Johnson Tract, and that's the one where the real synergies that come together on these two companies. So I think the other things that Shawn's addressed, and we have cash flow, we got lots of cash in the company, and so we are building a bit of a rocket ship here. But where the synergies really, where the rubber meets the road on the synergies is Johnson Tract and Kitsault Valley. They're both sulfide, precious metal rich sulfide type of ores. And they can go to the same mill basically, because you're basically forming concentrates of copper, zinc, lead, and maybe pyrite as a precious metals concentrate. And so that's where the real synergies are. They're high grade, they have similar metallurgy, and we believe that they can be processed at the same mill. We've got a couple of different ideas on where that mill is located. I probably want to just stay a bit quiet on that because we've signed CAs with a couple of different groups and we're in discussions there. So that's stay tuned for that news coming out sometime in the future. But for right now, that's where I really see the huge synergies between our Johnson Tract project and which is gold focused, but it's a sulfide type of occurrence, and the Kitsault project, which again sulfide, southern part's silver rich and the northern part's gold rich. So we like both silver and gold. I think when it's all said and done, and the resource update from the roughly 200,000 meters of drilling that's has been completed by Dolly over the last several years, when that is incorporated into putting a resource update together, say second half or first half of next year, I anticipate will be about 50-50 gold silver.
And Shawn, same question to you, and I'll add to that. How important is jurisdiction? The fact that Rick's company, Contango ORE, is currently operating in Alaska, which is not too far from the Golden Triangle of BC. Was that important at all?
It was very important. I've listened to my shareholders, and my shareholders have asked me not to diversify into tier 2 and 3 jurisdictions. So having the regional synergies, the geographic consistency, having high grade, having exposure to both silver through our portfolio and now bringing in a tremendous amount of high grade gold through the Contango portfolio.
Sorry, but if it was, let's say, tier one in Nevada, for example, would that still have worked for you in theory?
Uh, this works better because
Okay.
of the just again, there's a certain skill set into operating in the north,
Hmm.
and so I can walk you through all, and I've cited a number of them in terms of treasury, in terms of cash flow, in terms of enhance, presence, and from a capital markets perspective. But for me, really simply for your viewers, um, you're only as successful as who you align yourself with. And, in my career, when I started working with Frank Juster 3 years ago, I saw a direct impact to the trajectory and the success I was having, and the opportunity to work specifically with Rick. Rick, you look at Nova Gold, which is today is a $6 billion market cap. He was the founder and CEO. You look at Trilogy. He was instrumental in moving that project in the Ambler district forward. The U.S. government just came in and took a 10% stake. So for me, this is an opportunity to work alongside Rick. And, I think people are everything in this business, in an industry of depleting mineral inventory, it's often as important your next decision as your last one. And so under Rick's experience and leadership and specific expertise in this part of the world, that was for me, the thing that pushed the deal over the line.
All right.
Dave, I wouldn't
Please,
mind
yeah.
just adding that
Yes.
you mentioned Nevada and great jurisdiction, lots of
Mm.
opportunities there. But whether it would be Contango uh, or Dolly combining with someone running a heap leach operation in Nevada, uh, there are zero synergies there.
Okay.
And that's just a smashing two things together and saying they're bigger. That's not what this is. This is completely synergistic. Both these Kitsault and Johnson Track with the similarities that we've mentioned and the fact that they're on the water and the fact that we know that there's a couple of processing facilities that have excess capacity, existing capacity to process these ores. That's where we can move quickly. Again, because of this DSO model, there's not a lot to permit. And as Shawn has mentioned, in the Kitsault Valley, there's 5 mines that were in production, and so they have infrastructure. We can recalibrate that infrastructure to what we need for a modern DSO mine fairly quickly. Nothing happens fast in the mining business, but and certainly not without risk. But as projects go, these can be advanced quickly.
So, Shawn, now that you're partnering and merging with an existing operator, can shareholders expect this deal to signal that the Kitsault Valley is ready or almost ready for production? I mean, as much as you can disclose for now.
We've definitely made a lot of advancements over the years, both through the discovery-oriented drill programs, but also some of the accretive M&A transactions, particularly acquiring Homestake Ridge. So we've definitely made some significant moves in that direction. And there's some opportunities that are presenting themselves in the district that we want to get ahead of. So I think this is an opportunity in the mining sector. Single asset companies are at risk. And I think anytime that you can expose your shareholders not only to different aspects of the business, in this case, production, development pipeline, but the stock market really values growth. And I think, one of the things that I'm most excited about, in addition to obviously the strong balance sheet and cash flow, but the upside in projects like Lucky Shot, like Johnson Track, Obviously our own project is a growth project, but I just think there's a number of intangibles. And I've been joking with Rick that often you want to think of synergy and you want to say, okay, does 1 + 1 equal more than two? And
Mhm.
David, I think 1 + 1 and this one equals 11, particularly as we move forward and try to take advantage of some of those underutilized processing facilities.
So I'll just leave this on the screen here, the transaction highlights and strategic rationale. Again, the deal still needs to be voted on by shareholders and it has to go through. And before that happens, we can comment on what shareholders can expect once the deal goes through. So Rick, I'll start with you first. The synergies that you both have talked about. Let's drill down a little bit deeper, pun intended, and be a little more specific. What are the pain points or frustrations that an individual explorer or operator face on a daily basis that perhaps a synergistic relationship could fix?
Well, yeah, just start. You mentioned the shareholder vote, so just wanted to mention that we have strong support from our existing shareholders
Hmm.
with the voting support agreement. So I think it's 22% for each company, which was completely coincidental. And we have another a group of shareholders that have been longtime shareholders that because they're individuals, we didn't ask them to sign a voting support agreement, but they support the transaction. So I think we're well over 30% in support of from each side, supportive of the transaction. So I guess to answer your question, I mean, look, the transition from explorer to producer is not an easy one, and the industry is littered with wannabe junior companies, junior exploration companies want to be a producer. And again, going back to the Lassonde curve, that the typical successful explorer is taken out by a major or an intermediary, and that's great when that happens. And it happens as we talked about it. It's the acquirers are more prudent in their due diligence and more patient in executing M&A transactions than they were, say, 10 years ago plus. And I don't see that changing, at least not yet. So that means if you're an explorer and you're not taken out by a major intermediary, that means you're left to do this yourself, and that is a tough task, even in a great gold market. Everybody wants you to show them how you're going to do this and lower the risk. And for a whole variety of reasons, that when you're asking for money, the market's going to discount whatever you're saying, whatever you're pitching, it's going to discount that. And so that's the advantage I see with what we're doing together is we've got control of these four districts. We've got on a combined basis well over $100 million of cash in the bank today, and we're generating over $100 million in free cash flow. So we don't need the market to love what we're doing today because we don't need to ask the market for money. We hope that they do, and Shawn and I are going to explain why this combination makes a hell of a lot of sense for shareholders. But we don't need to raise money, and that's the best time. That's the best position to be in the market, and so that's why I think this deal makes sense for both sets of our shareholders here.
I guess, Shawn, let's just wrap up and talk about your overall vision for what you think Dolly Varden could become. And you and I have talked about this topic several times over the last 2 years now since working with you. And there's been a number of major milestones that the company has reached this year, including listing on the NYSE American earlier in the year, I believe, Shawn. And so now that you've got that listing well underway, and now that you've got this merger underway, tell us how these events and perhaps other events in the past have aligned or fit into your grander vision for the future of this company.
It's a great question. Starting with Dolly Varden, you know, this merger, if we look at the Kitsault Valley, what we envisioned was around a 6 million ounce per annum silver equivalent producer. And by merging with Contango, there, which is currently producing 60,000 ounces a year, but through Lucky Shot and Johnson Tract has a pipeline that points to 200,000 ounces of annual gold production. So what we see here just in step one is we'll be a 200,000 ounce a year gold producer with 6 million ounces of silver equivalent production. So that's what the pro forma looks like going into the future. And, Rick and I have a list of targets. And it's a conversation for probably, the step one is getting the shareholder vote in February, putting these two businesses together in March, going out for several months, sharing the value proposition, executing on the plan. There's a very exciting drill program that's underway right now at Lucky Shot. There's a big drill program that we've got planned for the Kitsault Valley. So as we've got a rich environment from a catalyst standpoint. And as we expect to be re-rated, we're factoring in the potential for about 50 million US dollars of buying that are going to go through to this new entity. And so as that becomes re-rated and realized, we will look to further grow that production profile. So the real vision here for me and for Rick and the combined business is we want to create, as Rick describes, a rocket ship where we're giving investors exposure to gold and silver production. And what we've created with this first step is there's only one other company, Hecla Mining. And if you look at Hecla, they've successfully run a business for 135 years, being the go-to North American precious metals producer. And now Dolly Varden and Contango, with the new Contango Silver and Gold, have come in as the only alternative to that investing. And that's Hecla and Contango and Silver and Gold. So that's what we've created today. And we want to continue and grow and build. And, I've got some really ambitious ideas and plans, and as does Rick, but we'll just take it a step at a time. And we want to under promise and over deliver. The business today is 100 million in the bank, 100 million of cash flow, great assets, and we'll move those forward and execute.
Rick, same question for you, and how this fits into your grander vision for what you think Contango ORE could have been.
Yeah, I mean, it probably sound a bit like a broken record to what Shawn said, but it's growing production, gold, silver, and I like that balance. As I mentioned, Contango doesn't have a lot of silver. That's just the geologic nature of our deposits. They're gold rich, and they have about a 1-to-1 silver gold ratio. And so, combining that gives us that exposure to gold that I think we think investors love, and we think silver is a great metal. So that's what the combination brings. And I mentioned earlier the 4 districts. So it's I'm an exploration geologist by background. That's my passion. That's what I love doing. Yeah. And having access to 4 different mineral districts that have demonstrated a track record of producing high grades. And that is something I really do like grade. Maybe it may sound a bit silly, but it's a differentiator between finding your average, it just pains me to read a press release when people talk about 1 gram being high grade. It just, it isn't. And when you talk about 10 grams, that's high grade. And so, and they have smaller footprints. We can mine these things faster and bring them into production quicker. And I think those are all the things that I like about the business model and the business combination. I used to say at Contango that we had a great 5-year plan. And what I want to say now with the combination, once that's approved by shareholders, that we will have a great 20-year business. And it's a step change. It'll be a completely different company.
Okay, I want to finish off on one last question for the both of you, and Shawn can maybe answer this from a deals making perspective, and corporate finance perspective, and maybe Rick can answer this from more of a geological perspective. When that's the market cycle that we started the conversation on, that we'll close off on full loop, and that goes to your outlook for the market. So some people might say that, well, look, now that we've got M&A underway, and first we had Anglo Tech, and then this one, among some others, perhaps brewing in the background. This signals the market top. Last time we saw this in 2011, we had the prices run up, gold to $47, $48, silver to $47, $48, gold as well. And shortly following that, a bunch of deals were announced, and then 2012 happened, and the market stayed in the lull for 9 years. How is this time different, if it is? Shawn, I'll let you go first.
Look, I just think there's so many little nuances and differences to every market cycle. You go back to the Great Depression, and there was really only one surviving entity, Homestake Mining, right?
Mm-hmm.
Uh, when you go back 10 years, you had these mega mergers, Randgold and Barrick, Newmont and Goldcorp. And so why this time is it's gonna rhyme but be a little bit different is as you're gonna see assets come out of those large cos. And so you're gonna see, for example, Hemlo popped out of Barrick, right? Coffee just popped out of Newmont. Discovery Silver acquired a project from Newmont. So I don't think you can look at M&A. Absolutely, historically, the level of M&A activity can mark a market top. But again, we're looking at, let's just take silver, for instance. It just went through 50. Well, that was the nominal high of 2011, the nominal high of 1980. If you look at other metrics, gold to silver ratio, commodity price versus mining equity, Dow to gold ratio, I don't see a topping. I don't see metrics that are calling for a top. And I just think on the M&A side, we have yet to see a flurry of M&A activity. There's just, because of the cannibalization of the M&A from the previous cycle, there's just far fewer entities. I think the real opportunity is what Contango and Dolly are doing, which is there is a void in the mid-tier space, and we are looking to fill that void. And what our real ambition is we want to become a larger company. We can't speak to it because it's just too early in that process, but initially we want to fill that mid-tier void.
Okay, excellent. Rick, I'll let you have the last word. Same question.
Yeah, I mean, if I keep going back to the Lassonde curve, but I'd say this: if you're right and this is the top, I guess.
Well, I'm not asserting that. I'm just maybe pointing out that.
No, but
yeah,
I'm just saying
right.
if that's a correct thesis,
Sure.
then I'm really happy with the combination here, because what we're focused on is cash flow, and if we're generating $100 million cash flow, we've got $100 million in the bank, so that's a lot of money to be able to advance other projects with. And just to put in perspective, that's $3 a share in free cash flow that you have available to advance projects. If we're on the top part of the cycle and the cycle goes back down, that gets back to your other point about why not buy things when they're low. So we'd have a field day if that actually turns out to be the case. By contrast, if you look at the other side and you're wrong and the market keeps going up, as I think both Shawn and I actually think is going to happen, because there's nothing out there saying that gold is going to go down and precious metals are going to go down in value, because we keep printing money. I mean, that's fundamentally what's driving all this. So we're happy in that scenario too, because our existing operations are just going to be that much more valuable.
Well, your Christmas parties this year are going to be twice as big. So congrats on everything that's happened so far to both you and your company. So well done. Tell us where we can find more information about what's next in this deal. Shawn, I'll let you go first.
So both companies have got the merger and investor presentation on the websites. We've created a landing page. I'll just, initially cite, our site, which is dollyvardensilver.com, which can get you to the landing page, get you to the corporate presentation, and I'll allow Rick to do the same for his for Contango.
Go ahead, Rick.
Yes, if you go to ContangoORE.com, when you write Contango ORE up, there's two O's next to each other. It is the correct spelling. But just go there and there's a landing page for the company course, but also for this joint venture proposal. So happy to be, and we also have an info at line item in there in the website. So if you have questions, you can go to the info at, and we will definitely get back to you on any questions submitted there.
Well, Rick, do we have a timeline on roughly when this deal may close?
Yeah, we expect it to be 3 months to get the shareholder approval and the court approval. I think those are the two formal steps that have to be completed.
Excellent. Well, I look forward to seeing that step completed and announcing that again. So thank you very much for coming on the show, both of you, and sharing your thoughts and this exciting announcement. Congrats again, and we'll see you again soon. Take care for now.
David, thanks very much. Shawn, good to see you.
Yeah, see you guys. Thank you.
Thanks for watching. Don't forget to like, subscribe, follow both companies. Links down below.